Good evening, students. Welcome to the live coaching classes organized by Board of Studies ICAI. So today's session, we are going to learn on this topic called time of supply. Time of supply is little interesting from application of its concept, where responsibility is given to identify the point in time when the supply takes place. So students, before we start with our further discussion, please confirm me on the chat window. You're able to listen me. My audio is perfect. And also you can see my PowerPoint presentation. And for your information, this PPT, what you are seeing here, along with the PPT, MCQs have been posted on ICAI website. Also, students, this Excel file, which I have been discussing on a daily basis, also has been posted along with the PowerPoint presentation. So you can download this material for your reference purpose. Yeah. So let me have a few confirmation, then I'll start with my discussion. Hope you're able to listen and view my presentation material. Yeah, thanks for the confirmation, Dhriti. Also, Kaushik. Yeah. So there's one question before we start with our today's discussion. Kaushik is asking this question. In the last class, MCQ 4, as service recipient is resident of out of India, but receives services when he come to India. So what will be the place of risk, place of supply, inside or outside India? Let me just open that MCQ, Kaushiki. Let me just share the MCQ file, then we will have a discussion on it. I believe you're asking question number 4. Yeah. So Kaushik is asking this particular question. There is a tour organized by an agency called Holiday Tours, who is a registered person in Gujarat. And they have conducted this religious trip to Mr. A. A happens to be a recipient of London. This A, along with his family, visits to India for an event called Bharat Darshan, which is an educational trip organized by the tour operator Holiday Tours. Part of this trip, Mr. A shall be visiting 10 states in India. What shall be the place of supply? So here, Kaushiki, you remember, we had section 6, section 7. Section 6 talks about where the activity or the performance is done in relation to section 3, subsection 4, subsection 5. If it is done partly outside India, partly in taxable territory, my place of supply happens to be taxable territory. And subsection 7 says, if this service is performed in more than one state or a taxable territory, then we will go as per the rules on the basis of your agreement, on the basis of generally accepted accounting principles. Each and every state, on the basis of the number of hours, number of days, or time spent, some parameter will be relevant based on which I identify my place of supply in each of the state in taxable territory. So for question number 4, answer is C, where on the basis of time spent in each state, that shall be my place of supply. Hope this is clear, Kaushiki. Place of recipient. Recipient is from London. Recipient is a person from London. Now, service provider is in Gujarat. Service recipient is in London. When one of the parties is out of taxable territory, then section 13 gets triggered. This is how I apply provisions of section 13 read with subsection 5, which deals with organizing a trip. Since the activity is done in more than one state, I also apply subsection 7. This is the answer to your question, Kaushik. Yes, Kaushik. This is covered under section 13. Reason, one of the parties is outside taxable territory. They are resident of London. Service recipient is visited for the purpose of receiving services. Hope this is clear. Great. Now, let me come back to today's presentation. So today, students, let's have the examples discussed for understanding why this time of supply is required. What is the importance of this topic called time of supply? As usual, we will discuss on few definitions which are relevant for us to understand the provisions. Also, we will understand the concepts connected with goods and services. How do I identify this time of supply in relation to goods, in relation to services? And one important provision called section 14, which deals with change in the rate of tax in relation to supply of goods or services. Most of you would have known that yesterday there was a budget presented by Honorable Finance Minister. Usually, whenever budget is presented, there are few provisions which get enacted, or the rate of change in the duty or tax proposed shall take effect from the midnight of the day when the budget gets presented. So, in continuation to that particular aspect, when there is a change in the rate of tax, how do we apply the provisions of section 14 to identify what rate of tax is relevant? And in the process, I'll take you through a couple of practical examples to make you understand how this topic, concept time of supply, is relevant and what practical issues or challenges we have in relation to time of supply. So, students, to start with, this slide I will make you to understand. By and large, my turnover from books, my turnover as per GST returns may not match. Now, most of you, if you have done your statutory audit or tax audit, you would have come across these provisions where you would try to reconcile what is the turnover as per income tax, that is form 26AS. You will also take the GST returns. You would see what is the turnover as per GST returns. Then you would take the turnover as per the financials which is provided by the client. If SAP or Oracle or Tally is the books of accounts, the software maintained, you'll try to extract that turnover and try to match, right? So here we will try to understand what could be the reasons where my turnover as per books, which will not tally or will have a reason not matching with my GST returns. So to start with, my revenue recognition as per the books of accounts is on the basis of my accounting standard 9. I would have dispatched the goods where my criteria for such dispatch could be on CAF, cost insurance free, or FOB, free on board basis. There could be a scenario where I, as a supplier, I have prepared a tax invoice. My contract with the supplier, with the customer, is CIF. So for a moment, say 26th of March 2022, I have raised an invoice for dispatch of goods. So I'm a registered person in the state of Delhi. From Delhi, the goods are dispatched to the customer in the state of Tamil Nadu. So 26th March, I have dispatched. On 5th of April, the goods reaches the customer in Tamil Nadu. Now, when you happen to do the audit for the particular assessee, you will say, so please give me the list of invoices prepared on 31st March, where the goods are sent on CIF basis. There's a standard term we use called GIT, goods in transit. So you would say that to the extent of goods which are in transit, I would not permit you to recognize the revenue, rather reverse the income which was booked to that extent. However, for the purpose of GST, you would have raised a tax invoice. You would have shown the respective GST on those documents, which could be the basis where turnover as per books is less when I compare with the turnover as per my GST returns. Second transaction, goods sent on sale on approval basis. I would have instance where I've sent the goods on a tax invoice. However, I say on the tax invoice, these goods are subject to approval. For a moment, let's take example. Say Joy Alucas or Malabar Jewelry or Diamonds. They have a policy that whenever a HNI client needs jewelry, so for a moment, a celebrity has got a function at their residence. Celebrities generally, they don't visit this jewelry shop. Rather, whatever the ornaments are there, the latest collection and all, they will be sent to the celebrity's house. They will take whatever items they want to choose, and the balance will be sent back to the showroom. So if the goods are sent on approval basis, I would reverse that revenue in my books. However, for the purpose of GST, the moment I have raised a tax invoice, I have to make the payment of tax. Third, there is an element called unbilled revenue. Unbilled revenue. What is an unbilled revenue? In a software company, in a service industry, they try to recognize the efforts which have been rendered to the client, but because of timing difference, I will not raise invoice on 31st March. For a moment, let's take example of a body shop software industry where they have a contract to render services to customer. I would say that when I deploy a team for rendering services on your site, I would raise the invoice from 25th of this month till 24th of next month. For a moment, say Kaushiki happens to be a service provider. Kaushiki has deployed a team of 20 people on a company called Wipro. Wipro says, Kaushiki, you can raise invoice for these 20 people on 24th of April 2022. Now, for your revenue recognition purpose, there's a principle called matching concept. I have to match all my expenses with my revenue. So she says, so I have rendered the services to you. Nevertheless, you have asked me to, insisted me to raise the bill on 25th of April 2022. For the services rendered from 25th of March till 31st of March, these 6 days, let me recognize revenue called unbilled revenue. So this is a common fashion or phenomenon in a service industry. But this revenue will not see a light in the GST returns. So when I map the reasons for the references, these could be a couple of instances where my books may indicate a revenue which may not have a mirror image in my GST returns. On the other hand, if I have to travel to the GST era, there is a supply between distinct persons. In the previous class, we have discussed this concept called distinct person. Section 25 is one provision which have made you to understand a person who has a unique PAN but obtained registration in various states. So why he has obtained registration? Because he makes a supply of goods or services in various states or union territory. For the purpose of GST compliance, wherever I render supply, wherever I supply goods or services, I have to take a registration. So goods supplied from one state to another state, though it's a stock transfer, I don't call as a revenue for the purpose of my books. However, it's called as a revenue or a supply for the purpose of GST. Second, tax which needs to be paid on services. All of you would have come across in your internship that wherever services are rendered, if I receive money in advance, I have to pay tax on such advances. Next, valuation. After this concept called time of supply, section 15, which deals with valuation, we will understand that when a service is rendered or when goods are supplied, in addition to the value which I bill, there's something called inclusion clause, where I notionally load some portion of value which are given as free of supplies by the supplier to me, by the recipient to the supplier for making such supply. I'll explain in detail when I come to the valuation topic. Last, deemed supply under section 143. The section 143 deals with job work. This is one of the fantastic provisions which are used by a job worker. I don't know how many of you have experience in the part of 3 years internship where you would have done internal audit of a manufacturing company. When you do internal audit of a manufacturing company, where goods are sent for job work, how a delivery challan will be prepared, how do you file your written called ITC 04, and the time limit of 1 year for raw material, time limit for 3 years in relation to capital goods will be valued if the goods are not written back within a period of 1 year. This concept of deemed supply gets triggered. Then last but not the least, under GST law, there's a cushion for me to raise a tax invoice. For services which I have rendered, there's a time limit within which I have to raise a tax invoice. So these are a couple of reasons why when I compare my turnover as per books, when I compare my turnover as per GST returns, both have a difference. So students, this concept of time of supply has its importance from identifying the point in time where the tax liability arises. I'll explain one concept which will help you to understand the importance of this concept called time of supply. Identification of time of supply. I'll give you an example of, say, SKF Limited versus Commissioner of Central Excise, Bangalore. This is a Supreme Court judgment. This is a Supreme Court judgment where it went on to discuss this aspect called time of supply. Say there's a supplier and there is a customer. I'll take an example just to make you understand the background of this concept called time of supply. Supplier called SKF Limited. And assuming for a moment there is a customer by name Maruti. Now, this SKF Limited, they are into manufacture of bearings. Maruti happens to be an OEM client, original equipment manufacturer. This SKF Limited supplies goods to Maruti on system, just-in-time basis, wherein Maruti gives a charter. Maruti gives a list of requirements on their portal on daily basis. On the basis of the shipment which is required by Maruti, SKF Limited makes the supply of bearings to this entity called Maruti. Now, when you follow this aspect of just in time, you have this value of supply, where every dispatch, every time when SKF Limited supplies goods to Maruti, there is an invoice, and whatever value of supply is there, Maruti makes the payment back to SKF Limited. Now, there is, if you try to analyze the procurement of supplier, there is a raw material which needs to be imported. There's a raw material which is procured on domestic basis. There are plant and machinery which are procured, imported, and also indigenous. Then you have local services procured. Then the regular overheads, which is like your consumables. Now, little bit of costing for us to understand. All these procurements, if you see, there's a price fluctuation on account of imports. Now, this supplier called SKF Limited, he has a control on domestic prices. Whoever supplies goods to SKF Limited, they fix the prices for a period of 6 months, 9 months, or 1 year. But with respect to import procurements, though the value of shipment is fixed from the supplier, there's a price fluctuation which happens on a daily basis. With respect to your customs, every 1 month, customs comes with a notified price. With respect to your RBI, which has a regulation on a day-to-day basis, this is a price fluctuation. So what happens here? On a periodical basis, this SKF Limited makes a negotiation of prices, which is called change in value of supply. So SKF Limited goes back to Maruti and says, look, when there is a price which have fixed upon, say for a moment, let's make an assumption of there's a bearing called 6204, which has a unit price of rupees 96. This price, they say, so because of huge change in the material which I import, the price, my landed price has gone up by 20%. Because of which I have to have my debit note to be issued for rupees 96 into 20%. They say, so I have to raise my value of supply by 19 rupees 20 paisa. Now, this 19 rupee 20 paisa was agreed by Maruti, and when SKF Limited has raised a bill for this 19 rupees, a question came from the Central Excise Authority. Where they say, look, you have made a supply on April, May, June, July, August, September. Now, for all these supplies, when you have raised the invoice, now you have concealed this price of 19 rupee 20 paisa. You're paying excess duty at a later point in time. Let me demand the price on this 19 rupee 20 paisa, not at the negotiated date. Rather, I'll travel back to the day when you have removed the goods from your factory. This dispute went into tribunal, from tribunal to High Court, from High Court to Supreme Court. Finally, at Supreme Court, this matter has settled at a point where Honorable Supreme Court saying, look, the price which has been agreed upon is not under control either at SKF Limited or Maruti Limited. SKF Limited has billed for rupees 96 at the time when the dispatch happened. Because of controllable instances, when there was a discussion, negotiation, and the customer has agreed to bill for 90 rupee 20 per unit, this is a negotiated price, and the time of supply for that shall be the day when you have negotiated, whereby the time of supply, the price, the excess duty which needs to be discharged shall be the day when the agreement happened, both the parties. This is a prominence which was placed with respect to identification of the point in time where the liability to pay tax arises. So students, this is one judgment of Supreme Court which is not relevant as on today. However, has a prominence for you to understand why we have to study this concept called time of supply. Yeah. So with this, I'll come back to my presentation to make you understand this concept called time of supply. So when we study this time of supply, there are few definitions. Important, I'll make you to understand this time of supply. When you understand these definitions, for having a clarity on time of supply, I'll also make you to understand this concept called tax invoice. Whenever we discuss time of supply, we need to understand I, as a supplier, have to raise a tax invoice to recognize that the goods or services have been supplied. There is also a concept called reverse charge mechanism. Most of you who have done 3 years internship, you would have very well come across this concept called reverse charge on notified list of goods, notified list of services. Having understood the time of supply, having understood the tax invoice, returns, how the information from my books of accounts I disclose in my returns. Is it that only when a tax invoice is prepared, I have to disclose the information in my returns, or on the basis of a journal entry, on the basis of a book adjustment, should I need to disclose that information in my returns? So when I talk about information, for a tax invoice, please keep in mind, there is a forward charge, there is a reverse charge. So information with respect to forward charge, information with respect to reverse charge, how this information flows into my data called returns. Then there is a deeming fiction called deemed supply. Under the taxing statute, there is a term called deem. I deem that the supply has taken place. Now, we have this term called mohumaya. Mohumaya means it's an assumption, it's an aberration, which we presume that it exists. Like when we talk about Trishanku Swarga, there is another Swarga which was created by Maharshi, which is presumed to exist at a point in time. Similarly, when we talk about this term called time of supply, when we take you through the provisions, somewhere under section 12, which deals with goods, somewhere under section 13, which deals with services, they say, I presume, I deem that the supply has taken place to the extent of an invoice which has been issued. I'll give an example. Sir, I have received payment from, say, Dhruti. Dhruti wanted to have an accommodation in a particular hotel on a vacation. Let's take example of, say, January 26th. January 26th happens to be a Republic Day. Most of us have this vacation plans whenever there is a public holiday. And we know that the bookings of hotel will be at peak. You will not get any of the reservations in these good old hotels. So when Dhruti makes a reservation, the hotel person says, ma'am, I will block a room for you on this date to this date on a condition that you have to make an advance payment. Okay, how much is the advance payment? Ma'am, 50% of the room value of, or say 100% of the room tariff, you have to make the payment. Chalo, I'll make the payment. But it's subject to condition that if you want to cancel the reservation, I'll not refund any money. And Dhruti has made a reservation for, say, 3 days to 4 nights. and she says, I have made a payment of 50,000. Now, Dhruti has to cancel this reservation. And if she has to cancel, very well she knows that she is not going to get back that 50,000. Even the hotel person knows that the service was not rendered. Now, in those cases, the money what was received, hotel fellow raises a tax invoice. Now, was the service rendered? Answer is no, service is not rendered. As per the provisions of section 13, there is deemed that the services were rendered by the hotel person to Dhruti. So these are the cases where deeming fiction comes into picture to understand this concept called time of supply. If this deeming fiction does not exist, then the tax authorities does not have a right to collect taxes on such services. In the course of this discussion, students, I would make a recommendation to you to read something called Article 265. Constitution of India, authority to levy, collect taxes, vest from Article 265. So when we read this Article 265, if someone wants to question, sir, you have explained under section 7 that there should be a supply. When Dhruti has made the payment to book a room, where is the service rendered? Or in case of supply of goods, when advance paid for supply of goods, when actually the ownership being transferred as per the sale of goods, how can you say as per Article 265, the supply under section 7 of GST has taken place? To curtail those arguments, the government has very well drafted these deeming fictions under GST law. That means to say, section 12 has an effect of overriding my section 7, which deals with my supply. Clear? Now, from here, let's move on to understand few of definitions in relation to the time of supply. First definition, associated enterprises. Most of you would have read this definition under income tax law. You would have read for the purpose of section 195, TDS provisions. Generally, when you would have done your internal audit, statutory audit, or tax audit, you would have come across these provisions where a provisional entry which was posted in the books of accounts, you would see whether there is a triggering point of associated enterprise. What is the impact? The moment I make a provision, though I don't receive bill, though I don't make the payment, I have to return the TDS under section 195. So this associated enterprises says that it shall have an effect, it shall have meaning assigned under Income Tax Act section 92A. An associated enterprise in relation to AE means enterprise which participates directly or indirectly through one or more intermediary in management, control, capital of another enterprise. So when we look at the books of accounts finalization, we have this holding company, subsidiary company, or your bilateral company, which is holding of two similar companies. All these definitions which are covered under Companies Act, read with your Income Tax Act, whenever there is a transaction of purchase and sale, then this associated enterprises comes into picture. So how is it relevant? We have to pay tax under reverse charge under GST wherever RC. This associated enterprises comes into picture. The next definition called reverse charge. Reverse charge refers to provision called liability to pay tax. By whom? By recipient. On goods and services under subsection 9, subsection 3, under 9, subsection 4. So here, 9, subsection 3, it's a notified list. So here, I would look at a list of goods or list of services on which tax needs to be paid. So here, for instance, if you have to examine goods transport agency or rent a motor vehicle, services rendered by a director, or list of notified goods, like example, purchase of raw cotton or cashew from an agriculturalist. These are certain list of goods or services under 9 subsection 3 where the law says service provider will not be burdened, rather the service recipient has to pay tax on those list of goods or services. 9 subsection 4, this is only for the purpose of this entry time of supply is tested in your syllabus, which deals with your construction related activity. Construction related activity. Fortunately, this concept is not tested in your examination. Who is a builder? Who is a landlord? Who is a promoter? What is a joint development agreement? How do we determine the time of supply in relation to JDA? All these are more technical. These concepts are not tested for your examination. So students, please don't go with any private material or don't get panicked. The concept of construction with respect to 9.4 is not tested in your examinations. This is kept out of your syllabus. Moving on. Continuous supply of goods. This definition of continuous supply of goods, I'll give you an example before we get into this definition. Take example of a hospital. Take example of a high-rise buildings, apartments. In a high-rise apartments, if you happen to visit these metropolitan cities or the cities, say you have 300 or more, say 500 apartments. These high-rise apartments, they don't have the domestic gas, a cylinder purchased. If you happen to visit these very good prominent builders, say Purvankara or Emerald or Shapunji or Pulanji, these are all high-rise buildings where there is a gas pipe which runs into each of an apartment, similar to your DTH services. You will not see this dish antenna. You will not see this gas cylinder which comes for delivery in these apartments. What happens here is Reliance or HP or BP, all these big suppliers, they have a contract. They say, look, it's like plug and play. I will connect a gas pipe to your residence. You connect your domestic stove for ignition purpose. As you consume on a periodical basis, I raise a statement and I bill for the gas what you consume. Similarly, you imagine these hospitals, say Fortis, Apollo or Columbia Asia. There's a oxygen which gets supplied to ICU. If you happen to this oxygen cylinders, the service, the seller, like oxygen is a sale of goods. The seller will not say, sir, I have brought 150 cylinders, please make the payment. No, they say, look, I need a continuous supply of oxygen in my ICU. On the basis of my consumption, based on periodical supply, you raise a bill. On the basis of that, I make a payment. With this backdrop, this term called continuous supply of goods comes into picture. So here, the term continuous supply of goods says that supply of goods. Please understand, students, carefully. When you look into a contract, when you happen to advise or when you do an audit, I don't know how many of you have done the audit of these Hindustan Petroleum, Bharat Petroleum, or this gas agency who have a contact with the hospitals. There, the contract is on consumption basis. Supply of oxygen, it's tangible when you fill into a cylinder. When the tap is open, the gas which comes out of the cylinder is intangible. However, for the purpose of levy, for the purpose of classification, I call that as goods. So please watch for the supply. Please watch for the supply. So here, what is important for you is your supply called goods. So wherever there is a supply, wherever there is a supply of goods, these supply which is provided or agreed to be provided. How? Continuously or on a recurrent basis under a contract, whether or not by means of a wire, cable, pipeline, or conduit. Now, if you happen to see this high-rise apartment, you will have this pipeline which runs through cable, where you have your dish TV, like no, your internet, your dish cable connection. All these aspects are connected through a cable. So services are rendered through cable or through pipeline, on for which supplier invoices the recipient on a regular or periodical basis. So what do you mean by regular? What do you mean by periodical basis? You happen to look at the revenue recognition, accounting standard 9. Now, please wait and watch. When you look at your accounting concepts, and also when you do your statutory audit, when you do your internal audit, this internet service provider, I don't know how many of you have this BSNL broadband or ACT broadband, Reliance broadband. They, each and every package, like it's a corporate connection, they raise a bill on basis of 15 once in a fortnight. In case of a domestic connection, once in a month, maybe beginning of the month till end of the month, middle of the month till next month. If it's for a period of 3 months, on the basis of recurrent basis, I raise a invoice. So students, this concept of classification, this concept of agreement to identify the goods comes into picture. Moving one step further, continuous supply of services. As I have mentioned, please examine the contract. Please identify, am I supplying goods? Am I supplying services? Classification comes as a handy to identify time of supply for goods, time of supply for services. If it's goods, I go to section 12. If it's services, I go to section 13 for services. So here, taking to your goods, this thing, supply of services, which is provided or agreed to be provided. How? Continuously or on a recurrent basis under a contract for a period exceeding 3 months. Now, look at the term. The condition of this 3 months didn't exist under goods. Examination, 1 mark MCQ. Supply of goods on a continuous basis is true or false. Examine below. It is on a continuous basis under a contract more than 3 months. It is under a contract on a recurrent basis. So the moment I see 3 months, I should not fall for a trap saying that even for goods, this 3 months is applicable. Only for services, this 3 months is applicable. So how do we remember? How do we have this 3 months back of mind? I'll give you a simple example to understand. Take example of ITL or Reliance or this ACT Internet Services. The basic contract on a recurrent basis starts with a period of 3 months, where they come give a delivery, install this broadband services, where they say, look, if you want to go for a prepaid mode, I would give this services minimum for 3 months. It starts. It's not like a month of your mobile connectivity. So these broadband services generally, which is on a prepaid basis, will be a block of 3 months. So when you talk about continuous supply of services, minimum period of 3 months should be there as per the contract. That's the definition for my contract for supply of services. Now, this is another important definition called a removal. The term removal in relation to goods means dispatch of goods for delivery by the supplier thereof or by any other person on behalf of supplier. Dispatch. I remove goods my factory. For what? For delivery. Now, this is done by the supplier or by a person on behalf of the supplier. Collection. I don't make a dispatch. I make available goods at my factory. If it is a free on board, my customer comes to pick the material from my factory gates. That's called collection of goods. So when you make available the goods or when you dispatch the goods for delivery. So as and when you remove the goods, the term removal gets into picture. So this definition says whenever the goods are dispatched for delivery, that's called removal. When you make goods available, when the goods are collected by the customer, that's called removal. Now, I'll give a couple of examples before I get into the direct provisions to make you understand with the time of supply for goods, time of supply for services. For a moment, let's take example. There is a vendor called Daily Fresh Grocery. Like you have this Instamart, India Mart, or Big Bazaar, or your Big Basket. There is a vendor called Daily Fresh Grocery. I have placed an order for rupees 12,800 on 29th Jan 2023. Usually, when I make a play order on this supplier option, I can make payment, that is door delivery, cash on delivery, COD, or I can make the payment the time when I book the material. Generally, most of the customers, mid-segment and high-segment customers, they don't have this cash, so they don't opt for cash on delivery. What they do is, the moment they place an order, they make the payment of goods. Money is received by the supplier. For a moment, let's assume this Big Basket happens to be the seller. On 29 Jan 2023, Big Basket has received the goods, order for the goods on 29 Jan for rupees 12,800. The goods are dispatched on 1st Feb 2023. So here, whatever goods are placed, it took 2 or 3 days for the supplier to pack the material, and on 1st Feb, the goods are dispatched. Now, from the seller's point of view, when should a tax invoice to be raised? Because the money was received on 29 Jan, my January closure happens to be 31st Jan. Should I need to raise the invoice on 31st Jan, or on 1st Feb, when the goods are ready for dispatch, should I raise my tax invoice? What would be your view? What would be your understanding? You would have done your internal audit, you would have done your statutory audit, you would have done your understood these practical situations. There's a issue from Viraj Desai. Viraj says that there is an issue with the video. Sir, I'm not able to view the video. There is a buffering issue. YouTube video is delayed. Facing clarity issues on ICA portal. Oh, I can see a clear video. Okay. Viraj says there is an issue with my video. I don't know how many of you have this issue. Hope I'm clear, and my presentation is also clear, students. Just reconfirm so that I'll escalate this to the... Oh, okay. Viraj says issue is resolved. Fantastic. Okay. Coming back to the question on hand, Kaushiki says, since the money was received on 29 Jan, raise the invoice on 29 Jan. Earlier of dispatch or receipt of money, raise the invoice. Balaji says, raise invoice on the date of dispatch. Srinivasan says, raise invoice on 29th Jan. Great. I have 3 answers. Dhriti says, invoice is to be raised on the date on which order is placed. Fantastic. Now, accounting provisions, GST provisions. Section 12 deals with my time of supply. So when should I raise my tax invoice? when should I account or when should I report that transaction for the purpose of GST? That we will understand when we go to section 12. Your concept of raising invoice on 29th January is perfectly all right. Perfectly all right. I would request all of you, Srinivas and Balaji, Dhruti, Kaushiki, to hold your answers to the provisions which we are going to discuss in a short while. Now, I'm coming with example number 2. Example number 2 is in relation to rendering of services. For a moment, let's assume that the Taj group of hotels, I have made a hotel booking on 15th Jan 2023. I have paid advance for rupees 25,000 and I have said that I'm going to check in on 15th Feb 2023. Now here, most of these luxurious hotels or destination theme based hotels, assuming if there is a occasion which is very, very important, I don't want to lose out a particular day out with my family. So here, I wanted to go out for a trip on 15th Feb 2023. Well ahead of 1 month, on 15th Jan 2023, I have made a booking where I have paid money of 25,000 in advance. This money what I have paid is for charges, accommodation, and also food. So what I have done, I want a perfect plan of my outing. So I have said, look, I'm going to come with family. These are the days I'm going to stay. This is the day where we have a wedding anniversary. I want so-and-so cake to be prepared for our wedding anniversary. I want this meal to be prepared for this particular day. I have given my entire itinerary to the hotel people. Now, GST rate for accommodation, GST rate for food, there is a variation. For accommodation, there is one rate, sale of food, another rate. Now, when I have received 25,000, for a moment, you happen to be a accounts in charge. How do you deal with this accounting for 25,000? January, I have received money. February, I'm going to get into the checking of this hotel. Now, when I say rate of tariff for accommodation is 28%, sale of food, say cake and pastries, is at 12%. Now, how do we break this 25,000 towards accommodation, towards food is $1 million question. How do you treat this advance? If a portion of this advance is non-refundable, does your accounting provisions permit to recognize that money the day you receive that money? Or if the money is refundable, assuming that I understand the value of a client, I will say, whatever money you paid in advance, I will refund back to you in case if you want to cancel. Reason, these are all high risk customers. I don't want to disturb the relation. So I'll say, you can claim back your refund. Does my accounting policy, does my accounting treatment change? Finally, the compliances with respect to GST. So students, these are all just a food for thought. These are all food for thought where I'm trying to make you understand how you deal with GST provisions, how you deal with your accounting provisions. Then example number 3, goods are removed on CAF basis. Goods are dispatched on 28th Jan 2023. When I say CIF, it's cost, insurance, freight. That means to say, till the goods reach the factory gate of my customer, I, as a supplier, is responsible for this supply. Goods are dispatched on 28th Jan. Goods are received by the customer on 5th Feb 2023. Acceptance is received by the customer on 6th Feb 2023. That means customer has received the goods on 5th February. This is meant for sale on approval basis. On 6th February, customer say, I'm going to retain the possession of the goods. Assuming for a moment, the value of goods on which the GST is rupees 36,000. What would be the disclosure for the month of January for that consignment? What would be the disclosure for the month of January for that consignment? What would be the disclosure for the month of February for that consignment? What would be the disclosure for the month of March for that consignment? What would be the disclosure for the month of April for that consignment? What would be the disclosure for the month of May for that consignment? what would be the treatment in your books of accounts? As I have discussed earlier, there's a principle, there is a funda called goods in transit. So would I recognize this consignment worth 20, no, say for a moment, it's worth around 3 lakh. The consignment worth 3 lakh, I would not call as a revenue for my revenue accounting books. But should I need to offer 3 lakh as revenue under GST law? Should I need to offer 36,000 as a liability for the month of January? And finally, what if goods are rejected on 6th February? For the month of January, I'm paying tax. My return for January, my statement for January on 11th of February, I have to file my statement. When I'm filing my return on 11th February, I know that this consignment, I should not pay tax. Can I raise a credit note on 31st January, or should I raise a credit note on 6th February only when the goods come back to my factory? These are all certain key issues, not only accounting issues. These are all connected with tax laws. Why I'm taking so much of time, if you think for a while, these are all examples in a niche, in a nitty-gritty or audit from GST point of view. If you happen to handle the GST audit independently, once you get qualified, there, every transaction, the department officer is going to examine from the provisions point of view. Why have you not paid GST for January? Though the goods are returned back on February, I hold you responsible for not paying the tax for January. 1 month return delay in payment of tax, interest under Section 50 can be demanded. So these are the examples. These are the examples I felt which are relevant for you to understand. Similarly, one example with respect to rental agreement. There is an agreement on hand where it says this agreement commences on 1st April 2020. But actually, tenant has taken a possession on 1st June 2020. So as a landlord, when you're doing a bookkeeping services, when you're raising a tax invoice, do you insist the client to pay the tax for April, May, or do you insist the client only to pay rental from June? When a department officer calls for your agreement says the tenancy starts from April. Money was not received for the month of April, though consideration was not received. Can the law officer insist that this service, there is a deeming fiction? You remember one of my slides, I was talking about deeming fiction. Can the officer say that it is deemed that you have rendered services by applying provisions of Section 13 by looking into your contract? So students, these are a couple of examples which you have to keep in mind when you read Section 12, Section 13, Section 15. Within 1 hour, we can finish reading from examination point of view. I don't want you to focus only from exam point of view. I wanted to learn from the concepts which is relevant from your career point of view. Now, before we get on to the Section 12, Section 7 is a cardinal principle which talks about supply. Every transaction, every provision I'm going to talk to you, please look at your Section 7. Section 7 is the section where supply is going to get triggered. So whenever supply takes place, you have to pay tax on the basis of criteria where supply is triggered: sale, barter, exchange, license, lease, rental. All these elements have to be met. Moving from there, levy under Section 9. You have to see whether there is a supply. I was giving an example of a rental agreement. Just because there is an agreement, can I say there is a service? I have to see Section 9 whether there is a levy which gets contracted. Supply of goods, supply of services. Sitting in Maharashtra for a moment, you happen to be a chartered accountant. You are sitting in Maharashtra. From your office, you have rendered services to your customer in Singapore. Can there be a levy attracted for this transaction? Then you will come and examine provisions of Section 9. You remember yesterday I have taken you to provisions, the previous session, Article 269A, where The constitutional power was brought in for interstate trade or commerce. Can a levy be triggered under Section 9 of CGST Act or Section 5 of IGST Act? If both these conditions are satisfied, then you will come to Section 12, you will come to Section 13 to understand what is my time of supply. Now, time of supply for goods, Section 12 deals with goods. In your working notes, please put the heading Section 12 hyphen time of supply for goods. Time of supply for goods. Under that, my time of supply, they say, time of supply shall be earlier of what? Earlier of date of issue of invoice by the supplier, or the last date on which he is required to issue, or the date on which supplier receives the payment. Now, two aspects were discussed here. The date of issue of an invoice, or the last date is required to issue with respect to that supply. Here, issue of invoice, or there's a condition, or last date is required to issue. This last date revolves to Section 31, read with rules. Rule 47, which deals with your time limit for issuing a tax invoice for goods, for services. So here, law says, look, you have made a supply. Raise an invoice. The day you raised invoice, that will be your time of supply. So what if I have not raised an invoice? Then the last date, which is required to issue under the law, or the date on which supplier receives the payment, This term receives the payment is connected with your advance. This term payment is connected with your advance. So the law says, my time of supply is triggered as and when the money is received. Earlier of these two aspects. I'll come to my Excel file to give a clarity on this provision. Section 12. Time of supply for goods. Hope my Excel file is visible. Dispatch of goods for supply. I have dispatched goods say I have dispatched goods on 28th of January 2023. Scenario 1, invoice issued on 28th Jan 2023. Scenario 2, no invoice is issued. Now, or I'll make a small alteration here. See, dispatch of goods for supply happened on 28th January 2023. 28th Jan 2023. I have prepared my invoice on 27th Jan 2023. Why it is done 27th Jan 2023? I'll give an example. Let's take example of a factory. Now, in a large organizations, there will be a accounts department, there will be a commercial, or there will be a taxation department, there will be a sales and marketing department, there will be a stores dispatch department. Now, there is an order from customer. The marketing person raised invoice on 27 Jan 2023. This was approved by the accounts department on 27 Jan 2023. Evening 4 p.m., it should be dispatched. The vehicle which needs to be come for delivery or pickup didn't came up. The next day morning, say 8 o'clock, the vehicle has come. So here, the accounts department has prepared invoice on 27 Jan 2023. Dispatch actually happened on 28 Jan 2023. So in this case, my provisions place a time of supply as per section 12 shall be 27th Jan 2023. So here, what we have to understand, because my invoice was raised on or before removal. If you remember the definition, a removal can happen. My invoice can be showed on or before removal. Since the invoice was prepared on 27 January 2023, though the dispatch actually happened on 28 January 2023, as per section 12, my time of supply will be 27 Jan 2023. Hope this scenario is clear. Is there any confusion? Students, is there any confusion with this time of supply? Examination MCQ. Based on this discussion, invoice was prepared on one date, physical dispatch happened on another date, acceptance happened by the customer on another date. They'll give you 3 different parameters. On the basis of this, I have to examine my section 12. Dhruti says invoice to be raised on date on which order is placed. Need not be Dhruti. I have received okay, for benefit of other students, I'll repeat this answer of Dhruti. Dhruti says the day when order was received, the day invoice has to be prepared. Take example of manufacturing company or say some sort of automation is required. Or I'll give example of big basket itself, Dhruti. Say customer has asked for 10 items. There's one item which is not available in stock. Till the item is completely not received, my SAP, my ERP will not permit me to raise the invoice. Keep in mind, I cannot raise the invoice unless the inventory is updated. So most of the cases, I cannot raise my invoice the moment order is received. Only when the goods are ready for dispatch, I prepare an invoice. So in this example, students, since the goods are ready for dispatch on 27th, but actually from factory, removal happened on 28th. So here, since the invoice was prepared on 27 January, I presume my time of supply is 27 Jan 2023. Scenario number 2. I have dispatched the goods on 28 January 23. However, no invoice was prepared. Now look at this transaction. It could be a sham transaction. It could be a bill to ship to transaction. It could be a fictitious transaction. I'll give you a minute. Please give your answer. Please give your answer for scenario number 2. I'll just give you a minute. I'll pause my video for a minute. Please give an answer. I'll examine your answer and then we will discuss for scenario number 2. I'll give you a minute. Please give your answer. I could see a couple of answers coming in. 28th January. Kaushik says 28th January. Dhriti says invoice not raised, so no time of supply. Balaji says 28th January. And Srinivasan says again 28th January. Okay, good. I have three answers 28th January and one person, no time of supply. Please understand. Though the invoice was not raised, I would say as per time of supply, as per section 12, shall be 28th Jan 2023. Here could be error, could be a mistake, whatever be the reason, since the goods were dispatched on 28th January, ought to be raised but not raised. My section 31 read with section 12, invoice has to be raised on or before removal. Students, please make a note of this point in your working note. Please make a note of this point in your working note. Section 31, read with section 12. A tax invoice has to be raised on or before removal of goods. On or before removal of goods. I'm not talking about services. I'm talking only about goods. Hope this is clear. Now, so here, as per section 12, we have understood when I have to raise invoice, what happens if I don't raise my invoice. I'll come back to my presentation. Now, there's a next concept, what they say, advance. You have to, if you're raised invoice, then it's that date. If you're not raised invoice, the day you have received your money, that shall be your time of supply. So in relation to goods, invoice or payment, whichever is earlier, we have to see. Now, this is an ancillary provision. This is an ancillary provision where money received up to a sum of ₹1,000. Now, it could be so happening that at times the customer makes payment maybe ₹100, ₹500 in excess of the actual consideration. Then they say it is at the option of the supplier to raise the invoice for such supply. So time of supply, whenever I raise an invoice, that shall be considered as time of supply. This is just to accommodate, provided that if the supplier of goods or services receives an amount of ₹1,000 in excess, so whatever money I have to receive, in excess of that money, whenever I have received, whenever the next supply happens, that shall be my time of supply. Next, moving on. Now, this slide talks about your advances. For goods, your time of supply shall be either tax invoice or receipt of money, whichever is an advance. So this receipt of advance made a lot of chaos in the trading industry. Why? I'll give you the backdrop also, students. Like when you read this theory, you'll understand it's as a theory, but the backdrop, if you understand, it is easy to correlate. Under VAT law, under sales tax era, there was no concept to pay sales tax on advances. So none of the goods, there was a concept. Even under central excise era, on advances, there was never a excise duty was collected. Only when the GST has come, the concept was brought in such a way that the liability to pay tax was crystallized when you issue an invoice or when you receive money in advance. So initially, they say even on advances, your time of supply gets triggered. This, they have relaxed initially to small time delays up to 1.5 crores. Later from 13th October 2017, this second limb of section 12 was completely kept in a dark. This entire second limb is not relevant. That means to say, my time of supply for goods is on the basis of issuance invoice. So you should have raised tax invoice on or before removal. So what if I have not raised? The day you have removed, it is deemed that the supply took place. That shall be your place of supply. So students, MCQ, one question on time of supply in relation to goods. Are there any doubts in relation to section 12? Are there any doubts so far what we have discussed? No doubts. Okay, great. Coming back. Now, this is a concept called revised tax invoice. This revised tax invoice is a concept which is there under section 31. I'll explain you this concept. Most of the time, a client will ask this question, or you may have this tendency to ask this particular point. I'll explain you this concept, then I'll come back to this slide to make you understand. Revised tax invoice. Mrs. XYZ Limited, unregistered person, applied for registration on, say, 1st Jan 2023. Now, this XYZ Limited, who is doing a business, they are not registered for various reasons. Probably they wanted to make an interstate supply, or probably one of the customer is insisting that unless you have a registration, I'll not give a contract to you. So he has applied for registration on 1st Jan 2023. On the basis of the documents, explanations, visit, etc., 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 proper officer has approved the registration on, say, 5th February 2023. And now what happened here? Application was made on 1st Jan 2023. Approval, the officer has given a registration. This is just arbitrary discussion, students. As per law, 15 days is the time limit, 15 working days they say, within which a registration has to be issued. I've just taken this extended date for example purpose. So here, what will happen to this XYZ Limited? Should the XYZ Limited keep idle, should not do any business, should not collect any taxes between 1st January to 5th February? It cannot happen. XYZ Limited, once he has applied for registration, he has to issue a tax invoice, he has to make a supply. So here, supplies shall be undertaken from 1st Jan 2023 up to 5th Feb 2023. Now, question comes here. Sir, I have applied for registration. Can I issue a tax invoice? Answer is, if you have applied for registration within the time limit specified as per section 22, 25, then you can issue a tax invoice. So here, this XYZ Limited shall issue a tax invoice for all the supplies which have taken place intervening period 1st January to 5th Feb 2023. So the law, that is section 31, says that, look, When you have issued a tax invoice, you don't have a registration certificate. You don't have a validity to collect taxes. So here law says that you can issue an invoice called revised tax invoice. When can you issue? How you can issue? Law says that within 30 days of approval, that is 5th February 2023, I have been granted with my registration. So in the month of February, assuming 5th February, I have got the registration, 28 days. So 5 days is gone, say 23 days, plus 7 days, 7th March 2023. Till 7th March 2023, I can issue revised tax invoices for the period 1st Jan 23 to 5th Feb 23. So here law says that, look, you have issued an invoice, but this invoice is not a tax invoice as per the law. All those dispatches, whatever you have done for the intervening period, I'll give you 30 days. From when I'll count that 30 days, from the day my registration was approved, from there, within 30 days, that is on or before 7th March, I can issue a revised tax invoice. That means I'll raise the tax invoice with GST, with place of supply, with the customer details, all those information. So I'm collecting tax by virtue of a revised tax invoice. And I disclose all those invoices in my return for the first month pertaining to the previous period. So this is one exception. Now, while we are discussing all these cases, Dhruti has mentioned one point. Sir, what will happen if you don't raise a tax invoice? Now, here on 28th Jan 2023, I have removed the goods. I have to issue a tax invoice, but I'm not issued. What if I am not issued on account of this reason? That is, I have applied for registration, but my registration was not approved. Now, there comes this concept called revised tax invoice. And this is the time limit within which I'll be raising a revised tax invoice for the intervening period. Are there any doubts in the discussion so far? Is this clear, or you have any doubts? Examination. Expect 1-2 marks problem to solve, to examine how the revised tax invoice will be issued, how you will calculate the dates, how you will examine the period. So this is little important from your 2 marks problem from examination point of view. Srinivas says no doubts, it's clear. Dhruti also says it's clear. Let's continue back with our discussion. Coming back. Next. I discussed this next concept called sale on approval. Issuance of tax invoices discussed, time limit I have explained, and the effect of certificate of registration is clear. Next concept is called approval for sale on written basis. So here the law says, this is again with under section 31. My time limit for issuing a tax invoice when the goods are meant for approval. When the goods are meant for approval. What do you mean by approval? Means subject to condition. So the law says that before or at the time of supply, whenever the supply takes place, please raise the tax invoice, or 6 months from such removal, 6 months from such removal, whichever is earlier. whichever is earlier. Now here, I'm explaining you the scenarios. What are those scenarios? When I look at section 12, section 12, in simple terms, they have said, please raise a tax invoice as per the time limit provided under 31. So when we have started with our discussion, I have raised invoice on 27th, but actual removal happened on 28th. There, because the tax invoice exists, I have gone with the date called 27. Second, we gave to a scenario where a revised tax invoice came into picture. Third, now I'm coming to a scenario called goods are sent on sale or return basis. So when I send the goods on sale or return basis, there are two conditions, there are two periods within which I have to raise a tax invoice. What was the first period? Before or at the time of supply. Before or at the time of supply. So if the supply happens before 6 months, that shall be your time of supply for raising a tax invoice. Or if I don't raise within 6 months, 6 months from the end of such removal shall be my time of supply. I'll take you through one example to have ample understanding of this particular example. Time of supply for sale on approval basis. I'll give examples. Please make a note of this example just for reference purpose. Though I'm sharing Excel file, my recommendation, have your institute material by hand or you have your working notes. My recommendation, please write down in your working notes as I take you through. At the time of examination, 1 hour of solid review of this running notes is good enough to crack your MCQ, to crack your short questions. Okay. Time of supply on approval basis. I'll give an example of, say, Mrs. ABC Tooling and Company. This company is a seller. I'll say Mrs. Honda as a buyer. This company is developing some handmade tools, handmade precision tools. I'll give you the example why this concept is being picked up. All these concepts are based on your real-time industry experiences. When you look at this example called Honda, you imagine this two-wheeler, Honda bike or this ignition motor vehicle. On an average, there are 3,000 nuts and bolts or screws which gets into the this body manufacturing. Now, when you look at this Honda, you need to have what you call a drilling machine or a tool which makes a designed tool or a hole on various parts and components. And when you're, I don't know how many of you have seen this video of Hyundai or Toyota, where the shop floor, this part will be moving, every person will be fixing the assembly parts. So here, there is something called a drilling machine or drilling tool. This drilling tool is a custom-made tool for Honda. What happens here is, when I do the drilling activity, like I don't know how many of you have seen this drilling machine. On the wall, when you have to put a nail, earlier days, someone used to come with the hammer, tuck, put a nail. Later, these days, no one is putting a hammer for the very simple reason, the moment you put a hammer, crack comes on the wall. That's the strength of a wall. So instead, they're coming with a drilling machine. You drill the hole wherever you want. For a moment, let's assume this supplier is into this handmade business thing. So here, this customer says, look, I want a tool for this drilling purpose. Cost of tool is say rupees 10 lakhs. Life, they say 10,000 batch production. Then they'll say replacement cost, they say rupees 10,000. Now, these are all technical parameters. They say, look, I'm going to give you a tool. This has a life. What is a life? 10,000 batch production. That means I'm not going to use it for 1 year, 6 months, etc. 10,000 units I can use continuously without breakage. Cost of one tool is 10 lakhs. Replacement cost, you over a period of that 10,000 batch production, the cost is going to be, operational cost is going to be just mere 10,000. Now, when I look into these examples, what comes as importance is your testing, your performance, and approval. So I cannot, as Honda, they'll not do the testing on real-time basis. You have something called simulation. I'll give a fantastic example to correlate with simulation. If you know this C8 or MRF tires, this C8 tire or MRF tire, they promise this tire has got 3 years or 10,000 kilometers. Now, when Honda purchases a tire, they cannot expect to run 10,000 kilometers and then buy the tire. Rather, they have simulation. They put into a process where, as if the vehicle has run for 10,000 kilometers, this vehicle will be run, and then this particular order will be placed. So here, simulation may take 1 month, simulation may take 10 months. So here, my section 31 comes and says, look, you have removed the goods, that is the tool, on, say, 10th January 2022. I call scenario 1. Customer approval received on, say, 31st March 2022. Invoice raised on 25th February 20, or okay, slightly I'll order this, instead of 31st March, I'll say 15th April 2022. Invoice raised on 30th March 2022. This is scenario number 1. Now, here on 10th January, I have sent the goods. 10th January, I have sent the goods. What is the condition? It is meant for approval, sale on approval basis. Till the customer is going to approve the goods, I cannot raise tax invoice. Here, customer approval was received on 15th April 2022. On 30th March, I raised a tax invoice. So here, law says, section 31 says, as per section 31, read with section 12, time of supply shall be 30th March 2022. So by 30th March 2022, law says, look, I have given time limit of 6 months. If your supply happened prior to 6 months, let that be the date of time of supply. If you have raised invoice much prior to approval, the moment you raise invoice, I'll take that as my time of supply. Now, $1 million questions. So why did the invoice was raised on 30th March, though the approval came on 15th April? Probably your accounting marketing has a pressure to show revenue, or customer said, don't worry, I'll give an approval. Please go ahead and raise the tax invoice. Some sort of adjustment, some sort of compromise, lot of business requirements. My invoice was raised on 30th March. By virtue of these provisions, my time of supply is 30th March. Before I move on to scenario number 2, are you clear with this example? Are you clear with this example? Srinivasan says clear. Jyoti says clear. Balaji says clear. Good. I'll go ahead with further discussion. Now, this I'll slightly alter. Scenario number 2. My goods are removed on 10th January 2022. I have removed my goods on 10th January 2022. Customer approval was received on, say, 31st October 2022. 31st October 2022. Invoice was raised on, say, 1st November 2022. Now here, goods, my tool was removed on 10th January. Customer has given his approval on 31st October. Now, January till October, it's beyond 6 months. Law says, by time of supply as per section 31 shall be the day you have made a supply. Invoice was raised on 1st November. 1st November happens to be much beyond 6 months. So my time of supply says, in case approval basis, invoice shall be raised before or at the time of supply, or 6 months from the such removal, whichever is earlier. 6 months from the date of removal. So as per the law, I should have raised my invoice within 6 months. So 10th January, if I count January to Feb, Feb to March, March to April, April to May, May to June, June to July. 10th July 2022, I should have ideally raised I should have raised my invoice on 10th July 2022. In this case, I raised my invoice on 1st November 2022. So students, here, since there is a delay, section time of supply shall be 10th July 2022. 6 months from the date of removal, I should have raised my invoice. So here, my supply time of supply shall be 10th July 2022. Now you may ask a question, sir, accounts department raised on 1st November. Shouldn't I pay tax during November? Answer is no. Time of supply says my raise invoice on or before removal, or as per the time limits provided under section 31. So accordingly, this 10th July happens to be my time of supply. Time of supply. Is this clear? Scenario number 2. Is this clear? Clear. Okay, good. So students, we are at 7:40. Let's have a break for 10 minutes. 7:50, let's resume back. 7:50. Friends, let us continue with our discussion. Time of supply for goods. So I have explained normal tax invoice where there is a removal. I've also explained where there is a revised tax invoice to be shown. Third, I have also explained the approval when goods are sent on or sale on approval basis. Next. Now here, beginning of this discussion, one element I was stressing upon, deeming fiction. So this section 12 has got an explanation where it says that supply shall be deemed to have been made to the extent it is covered by a tax invoice. So here the provision says that, look, the moment I issue a tax invoice, I presume that the supply has taken place. Second, date on which supplier receives the payment shall be date on which payment is entered into the books of accounts or date on which payment is credited into bank account. Now, this explanation too, again, will be tested as MCQ from your examination point of view. What they will test you? Money was received as money was accounted in the books on say 15th April, but that money got credited on 30th April. What shall be the time of supply? Whichever is earlier, when I have entered as a receipt or when this was credited into my bank account, whichever is earlier. Moving on further. Now, continuous supply of goods. I have explained one example where this supply of goods comes into picture. I was talking example of this oxygen or supply of this gas, cooking gas at the residence. So in these cases, they say whenever there is a contract, look at the successive statements. So periodically, whenever this accounts are or a statement is issued or when the payment is received, whichever is involved, that shall be my time of supply. So if I raise once in 3 months, statement once in 3 months, that shall be the time of supply. If I receive payment once in a month, that shall be my time of supply. So in case of continuous goods, not much to worry. The reference is my statement or payment, whichever is received. Next. In relation to this goods, I was mentioning some time back, reverse charge mechanism. Under GST law, you would have read levy 9, section 9, subsection 4, section 9, subsection 3, where tax needs to be paid on a reverse charge basis. So here, law, this section 12, subsection 3 is trying to identify how to identify time of supply for goods on RCM basis. So when we talk about goods, we can touch and feel it's a tangible item, date of receipt of goods. I can make the payment to the vendor, date of payment. Third, 31st day from the date of invoice. So in simple, law has mentioned that whenever you have to pay tax on reverse charge mechanism for goods, goods are tangible, which can be touched and felt. For that reason, the day you have received the goods, the day you have made the payment, or 31st day from the date of the date mentioned in a tax invoice. Earlier of these three shall be my time of supply. This is what we need to understand. Examination, again, 1 mark MCQ. They'll give you the goods are received on say 15th of January 2022. My payment is made to the vendor on say 31st December 2021. And the 31st day from the date of invoice say happens to be 12th of February 2022. When 3 dates are given, whichever is earlier, that shall be taken into consideration. Since I made the payment to the vendor on 31st December 2021, earlier of these three, this happens to be my time of supply. Examination, 1 mark MCQ you can expect on the dates relevant here. So what if these three aspects are not found? I don't have details of receipt of goods. I don't have payment details. I don't have the invoice to reckon all these things. The day when the entry was posted in the books, that shall be considered as a time of supply. Now, this was an ancillary entry. This provision says whenever there is a fraud, suppression, misstatement, books of accounts are not properly maintained, the day when you have recorded that the goods have been received, that shall be taken into consideration for reckoning time of supply. Next, time of supply by a voucher. Examination, this is one question for goods or services. You can expect one question, either MCQ or true and false. I'll explain the concept of voucher, then we'll come back to this provision. Now, vouchers are an instrument which carries a monetary value for redemption at a particular point. I'll give an example to understand this particular aspect. Say there is a office. Let's take example of our own office. So every Friday there is a some Friday funda concept where article assistants are asked to give a 1 hour or 30 minutes deliberation on a topic of their choice. Out of 3-4 article assistants who perform better will be given a voucher. The voucher will carry a value of say 500 or 1000 rupees. Principal says, look, this is a voucher. You can go to this book house, show this voucher, buy any book of your choice and redeem the value of this voucher. So for a moment, I give a voucher for rupees 500 rupees. You like when I give a voucher for 500, it will be having a date. This voucher is valid like assuming it has been signed. I purchased a voucher. Say every week I purchase a voucher, and when the voucher is purchased, the shop person who's selling this voucher will say, sir, I'm putting the date of this week. From this week, 3 months is the validity of voucher. That means let your student come to the shop, show this voucher, buy any book, and the value of this voucher can be redeemed. So in case of this vouchers, they say that the value of this voucher may match with the supply value or maybe less than the supply value. So in case of voucher, where the date of supply is identifiable, that shall be the date of supply. That means to say, the voucher says 30th January 2022. Specifically, on this date, you can come and redeem. When you have given a date, that shall be the date of supply. Rather, you have given blanket of 3 months, 6 months. Whenever you go to the shop to buy a book, the day you have given the voucher, that shall be the date of redemption. So the law says, when you have specifically printed a date saying that on this date, you have to come and purchase this, redeem this voucher, that shall be the supply. I have not mentioned date, rather I have given a blanket period. The day you come and redeem, that shall be your redemption. That's your time of supply. So voucher is an instrument which carries a monetary value, This is required for me to buy a goods. This is the concept of time of supply for goods. So what if I cannot apply this subsection 2, that is for invoice, subsection 3 for RCM, subsection 4 for vouchers? I cannot do any of these validations. Then the period when you have to file your return, that shall be your time of supply. This entry number 5 is an extreme ancillary provision, not invoked in general. Then there is something called late fee, interest, or penalty. That means generally on an invoice, it will be written the goods are for a credit period of 60 days. If you don't pay within 60 days, simple interest of 12% is applicable. So in case if I recover money along with interest, that interest will also form part of my supply value. When I go to the next session, which talks about valuation, you'll understand more detail with respect to value to be included in supply, value not to be included. So here, time of supply says, along with the main invoice value, you receive late fee, interest, or penalty because the customer delayed in make the payment and he paid that also for the main supply. Then in that case, the time of supply shall be the day you get your interest, that shall be your time of supply. There is one slide which you can see on my screen. This slide is taken from the guidance note issued by CA Institute on GST. Just for your interest, I have picked up this slide. Examination, don't worry, this will not be tested. Only for your knowledge purpose, how to differentiate money, a voucher, loyalty point. Money is a physical money which you are carrying with you. Voucher is a voucher where I give an example where your principal gives a voucher recognizing your performance in a debate. Loyalty points are those points where a hotel or say this airline booking or credit card gives loyalty points. Like example, when we book a flight ticket on Indigo, there is a 6E loyalty points. When I do a booking on Taj group of hotels, for every number of nights I spend, I get something called loyalty points. So differentiation between these three, how it will be tested for GST purpose. I have adopted that slide. Examination, don't worry, this is not going to be tested. And this again, a slide continuation to the previous slide I have brought in to explain various examples, which is a voucher, which is not a voucher. Now, this slide I have, because I have explained one example, I'll skip this particular slide for paucity of time. I have taken one example to determine my time of supply. For you as a practice, you can do it at your leisure time. Moving on, time of supply for services. Now, as we have seen for goods, for services, they have given simple. Your time of supply for services will be on the basis of these three criteria. Earlier of A, B, C. A says that, look, the date of issue of invoice, if the invoice was issued within the time prescribed. If it is issued within the time prescribed, or date of receipt of payment, whichever is earlier. So first condition, you have to issue invoice for service. If you have issued the invoice, it is well within the time limit. When I say time limit, we have to refer to section 31. Please make a note, section 31. So if I issued an invoice within the time limit section 31, I will examine that invoice or receipt of payment, whichever is earlier. Earlier of receipt of money, earlier of issue of invoice, whichever is earlier, that should be time of supply. Clause B, date of provision of service if invoice is not issued. So they say that as per section 31, you have a time limit to issue an invoice. What if you have failed to issue an invoice? Then I'll come back to something called provision of service. This becomes little dicey when you do an audit. Most of you who have done again statutory audit or internal audit, there is something called revenue recognition, accounting standard 9, on the basis of provision of services, percentage of completion. There is a mechanism we will say, on the basis of this portion of work completion, this is a revenue you have to raise. So provision of service gets triggered where I fail to raise a tax invoice, or date of receipt of payment, whichever is earlier. Clause C, date on which recipient of that service shows the receipt of service in books of accounts where provisions of A and B do not apply. That means I, as a service provider, I have not maintained my books of accounts. My customer has accounted the dates in his books of accounts. Then I will consider the time of supply as per my customer. Now, I'll come back to my Excel to make you understand the entire provisions on section 13. Now, time of supply for services, you have to remember three aspects. Time limit as per section 31, then advances, then accounting as per recipient books. Now, these are the three aspects which is being tested in section 13. As per section 13, they say that, look, I'll give you a time limit of 30 days to raise a tax invoice. 45 days in case of a bank or NBFC. So here law says that in case of services, I give a cushion of 30 days to raise a tax invoice from the date of provision of service. Now, you could ask, so why is that? 30 days is given time limit as per the law. I'll give you the backdrop and then you can understand this concept for application. In a service industry, I'll give an example. Service of manpower deployment. So when I talk about the service of manpower deployment, could be a security contract, could be accounting service manpower, could be a software company outsourcing their manpower, could be any of these agencies. Now there is something called timesheet approval. There is something called your deductions or penalties. There is something called your contract extension or validation. There is something called your data approval for work order. Now, these are all scenarios, these are all reasons why my services cannot be billed immediately on 30th. When I talk about a software company, when I have to render services to a customer, 1st to 30th, when I have rendered the services, it is highly impossible for me to raise invoice on 30th. Revenue recognition, you can recognize the revenue, unbilled revenue, whatever you say. But first thing is I have to get the timesheet. Second, I have to punch all this information on my customer portal. Third, customer will say, employee wise, these are the number of days LOP, these are the days deductions, this is a work which was not performed. Then value for contract. I have billed for say 2,85,000. My value in the contract is only 2,50,000. I need to get the contract order value to be enhanced by 35,000. So my customer has to enhance the value. A lot of practical issues are there where it takes some decent amount of 15 to 20 days to raise an invoice. Now, lawmaker, considering all the practical difficulties, they say, look, you render your services. Let me know what is your provision of service. From the day you have rendered your services, I'll give you 30 days. So this is a concept for time limit as per section 31. This is when you raise a tax invoice. Advances, the moment you receive money, your time limit for your time of supply gets triggered. In case of goods, I gave clarity that government has withdrawn to levy or to crystal the liability for goods. Services, the moment I receive advances, I have to pay mandatorily my GST. Third, sir, supplier, service provider has not maintained proper books. As supplier has not maintained proper books, supplier has also not issued a tax invoice in timely manner. Because of these reasons, I go to the recipient. I'll check the books of accounts of the recipient. That shall be the basis for me to raise a tax invoice for time of supply. So this is a nutshell provisions connected with your time of supply for services. As I say, 30 days for regular service provider, bank, insurer, NBFC, 45 days is a time limit. Next, like goods, any money which I have received more than service value. Like example, sir, I have to receive 50,000 for my bill. The client has remitted 50,500 rupees. Now that 500 rupees, what I will do till my next bill which I raise, I'll keep that 500 in my books. Whenever I raise my subsequent bill, that point in time, I'll pay tax on that 500 rupees also. This is my provision, relaxation up to a sum of rupees 1,000 rupees. Now, in case of continuous supply of services, like what we have discussed in relation to goods, in case of services, they say, look, you are rendering services on a continuous basis. Like what are the examples of this continuous supply of service? One, construction activity. Second, say your DTH, like your Tata Sky or ITL or any other dish service provider, or your telephone landline. These are all the services which are rendered on a contract basis exceeding a period of 3 months. Now, in these cases, my time of supply should be when there is a contract where my payment can be ascertained. So they say, look at your contract. Every milestone where there is a payment linked, that shall be your time of supply. So what if the payment is not ascertainable? Then look where the invoice will be issued, where my payment is received from customer, where I have to invoice, where before receiving money, I raise the invoice for the value of work done. That shall be my time of supply. So this is also not done. Then provision of service. Whenever you render your services, please raise an invoice. In simple terms, it is a continuous journey. Look at your contract. Contract has got every month payment. So raise a tax invoice, or place of supply, the time of supply is your every payment cycle. If not, the day when you raise a tax invoice. Now, this is how I identify my time of supply for services. Continuous supply of services. Moving on, reverse charge mechanism for services. Very simple. In relation to goods, we had 3 elements. In relation to services, only 2 conditions. I have made a payment. Like in case of goods, it is tangible. I can see the date on which goods are received. For services, I cannot say this is the date when services are received. Rather, I look into something called the date when the payment is made, advance payment to my supplier, or the payment against the bill. Second, 61st day from the date of issue of invoice. In case of goods, 31st day. In case of services, 61st day is my time of supply. In case of associated enterprises, that is your related party transaction, like income tax, TDS provisions, the day you make a payment to associated enterprise, or the point in time when you account for the transaction, that shall be your time of supply. Now, vouchers. Like I gave example of goods where vouchers are given by the principal. Now let's take example of voucher for services. Voucher for services, again, it is as good as a instrument which has been loaded with a value. Now, I'll give an example of say Taj group of hotels. Taj group of hotels says, sir, every stay I'll give you a voucher which has got value of say 20% of the bill value. Say I have spent 20,000 in a particular stay. For 20,000, I get it 20% of value as 4,000 as a voucher. So when that 4,000 is there, the Taj group of hotels will say, Sir, I'll give this voucher. You can redeem this voucher on your birthday. As a token of appreciation, we wanted to keep our customer happy. Look, you have spent a sum of rupees 20,000. I have given you a voucher for rupees 4,000. What you will do with this 4,000? So you can avail this voucher on your date of birth. Assuming for a moment, my date of birth happens to be 1st January. Only on 1st January, I can redeem that voucher. So here they say, wherever a voucher is issued, where it has a date of specific date of issue, that shall be your time of supply. So what if the date is not there? They have just given a blanket of 3 months. Whenever I go for redemption, whenever I go for again accommodation service, that time I give this voucher, that shall be my time of supply. Now moving on to important aspect of today's discussion called change in rate of tax. Change in rate of tax. I'll explain you the backdrop, then I'll come back to this provision to make you understand. Little important, please pay attention. Change in rate of tax. I'll give an example, then we will understand this concept with the provisions concept, right? Okay. 46th GST Council has proposed for GST on hotel accommodation at the rate of, say, 5% on tariff less than 1,000 rupees. Now, this provision was brought effective from, say, 18th July 2022. 18th July 2022. Little important, pay attention. This change in rate of tax only, it is not used only from examination point of view. As you progress in your career, you come across this aspect which you have to test for its application very, very carefully. Let us take a scenario. Hotel like Mrs. Sanman Hotels Private Limited. They have a room tariff less than 1,000. Booking made on, say, 15th of July 2022. Booking made on 15th of July 2022 for service of accommodation. My service of accommodation is from 25th July 2022 to 30th July 2022. Say this is for a period of 6 days. Rupees 6,000 is the value of supply. Now, scenario 1, I'll put scenario, then tax invoice, I'll say supply, then tax invoice, then payment. Now, scenario 1, supply. All of you know that supply can take place only when the service is rendered. So for all practical means, when I say supply, I'll say 30th July 2022. I can provide service. I can provide service only on 30th July 2022. Tax invoice. For a moment, I have received money in advance. I have issued a tax invoice on 15th July 2022. Payment. This is a case where money was received in advance on 15th July 2022. Now, question comes here. When the customer comes for stay, the day he made a booking, the day he has made a booking, the law position as on 15th July, any room hotel accommodation whose tariff is less than 1,000 rupees, no GST. No GST. And the day the money was received from customer, absolutely no GST. In between, 18th July is the date when the law was amended, where they say any hotel accommodation whose tariff is less than 1,000 rupees, you have to collect GST at the rate of 5%. Now, services are rendered from 25th July to 30th July, say for a span of 6 days. 6,000 happens to be the service value. For a moment, GST on 6,000, 6,000 into 5%, SGST, CGST, say 300. SGST, CGST is 300 rupees. Now, question comes here. Should the service provider called Sanman Hotel Private Limited collect the tax of 300 from customer or tell to the government that, sir, I have collected the money already. I have made the booking already. I have raised the invoice much earlier. So please don't insist me to collect 300 rupees. And it is burden on the customer to make the remittance if it was demanded at a later point in time, right? So this is an example way. I come and examine this provision under section 14, which talks about change in rate of tax. Is this example clear, students? So far, whatever we have discussed, whatever example I've discussed, is this clear? Any doubts? Balaji says clear. Good. Now, moving further, section 14 has come to rescue this element of school element of theory called handling change in rate of tax, where they have said, identify these 3 elements. What are those 3 elements? Identify these 3 elements. Identify when the supply took place. Identify when a tax invoice has been issued. Identify when the payment has taken place. Supply, all of you know, section 12, section 13. There's something called deeming fiction. It is deemed that the service is rendered. It is deemed that the goods are supplied to the extent of money which has been received. So, if I put a condition such a way that the moment money was received, there is no refund. Whatever money you have paid, it is deemed that supply took place. Even on cancellation, I'm not going to pay you back that particular money. So supply is important. Issuing a tax invoice is important. Verifying payment is also important. Now, these three elements were taken to say how you can examine your time of supply. Coming to your presentation. Law says, first, scenario number A. In this scenario, they're saying that in case goods or services are supplied before, goods or services are supplied before change in the rate of tax. Now, in this example, what we were talking, this hotel accommodation. So, can the supply take place prior to this accommodation of 25th July? Answer, yes. How it can take place? I make a deeming fiction that the day I receive money, it's deemed that supply has taken place. So wherever the goods are supplied before change in the rate of tax, they say examine these three aspects: invoice, payment, time of supply. Now, there are three elements as I was mentioning. Element number one, supply. Element number one, supply. Element number two, invoice. Element number three, payment. Examine these 1, 2, 3. Here, supply is prior to change in the rate of tax. Invoice is issued after change in the rate of tax. Payment is received after change in the rate of tax. So the logic is majority will prevail. In the nation where democracy prevails, out of 1, 2, 3, whichever event takes place, change before, change after. Here, supply has taken place before change in the rate of tax. But after the day when the rate of tax has been notified, after that day, in our example, when I come back to my Excel file, in this Excel file, if you see carefully, 18th July is the day when the change of rate of tax took place. Prior to 18th July, I have received the payment on 15th July. I also have issued a tax invoice on 15th July. So there are two events: issuing a tax invoice, making a receipt of payment. Since two events happened prior to change in the rate of tax, then the loss is that my time of supply shall be date of receipt of payment or date of issue of invoice, whichever is earlier. Since two events happen after change in rate of tax, new rate of tax gets into picture. In our example, accommodation was exempted. Now, after the 46th GST Council, it was taxed at the rate of 5%. So here, answer is 5% GST is applicable. My time of supply is date of receipt or date of payment. These two happen after change in the rate of tax. Applying that provision, GST is applicable. This is my scenario number one. Scenario number two. So what if invoice is issued before? Okay, let me just mark these things. This is element number one. This is element number two. And this is element number three. Now, out of these three elements, two events happened prior. That is, supply happened before change. My invoice was also issued before change. But my payment from the customer received after the change in rate of tax. Democracy, prior to change, that is, date of issue of invoice. Invoice is issued prior to supply. So old rate, if the goods and services are exempted, my old provisions shall be applicable. Third scenario. Invoice was issued after the change in rate, that is after 5%. Goods are supplied before the change in rate. My money was received before change in the rate. Since two events happened before change in the rate, my time of supply shall be date of receipt of payment or supply, whichever is earlier. Here, since the date of payment happened prior to change of supply, my old rate will be applicable. So students, here what we need to examine, three things we have to take into consideration. One is supply. Point number two, invoice. Point number three, payment. These are the three aspects. These are the three aspects which is going to test how we will determine whether the old rate is applicable, whether the new rate is applicable. Do you have any doubts so far on this change in rate of tax? Good. So far, so good. No doubts. Let me continue further. Now, like your previous provision, this is a case where supply has been done after. So one event has been done after the change in rate of tax. Situation scenario 2 and scenario 3. So in scenario number 1, supply is taken place after, payments also has done after the change. Since 2 happened after the change of rate of tax, the new rate of tax is applicable. How is the new rate of tax linked? It is linked to your payment date. Scenario number 2. My supply is after the change in tax, invoice is before change in tax, receipt of payment before change in tax. So out of 3, 2 happened at old rate. So what is applicable? Old rate. When I say old rate, either receipt of payment or issuance of invoice, whichever is earlier. Then scenario number 3. Supply is done after. My invoice is also issued after, but payment is received before in the old era. Since out of 3, 2 events are in the new rate era, my time of supply will be the day when I have issued my tax invoice. These are the provisions connected with my section 14, change in rate of tax. So section 12, section 13, section 14. Now these 3 sections are connected with identifying time of supply for goods, time of supply for services, and change in rate of tax. Now we are moving on to the next topic called common errors with respect to time of supply. Maybe another 5 minutes we'll spend on this topic. Then we'll go on to valuation, which is one of the important aspect under GS Flow. Another 5 minutes down the line, we are going to start with our topic called valuation. Tax invoice is prepared, goods are not dispatched at the month end. Now, when I don't issue an invoice, I give example number 1. The day when you have removed, that shall be your time of supply. Contracts with composite supply, where it could have goods, it could have services. I'll give an example to understand this composite supply. Say for a moment, there is one supplier, there is one customer. Supplier is selling, say, DG set. Supply is selling a DG set. DG set is your power backup, diesel generating set. Also, seller of acoustic and also engine. Now, this example is a live example from industry. I would say it's a tax planning, not a tax evasion. It's not a tax evasion. This DG set, what you see, this is a diesel generating set. Most of these big apartments or malls where you go, I gave example of this DG set already. There is an engine. There is an engine. The moment power goes off, there is a what you call connector, a capacitor. This capacitor sends a signal to this engine saying that look, the main power went off. The moment main power goes off, this starts functioning. Most of you to correlate this example, if you have a UPS system at home, power backup system, the moment power goes out, UPS gets on automatically. If you look at that UPS junction box, there is something called mains, there is something called UPS. The moment the power goes off, as long as power is there, this UPS gets charged, where capacitor and conductor gets charged. When the main supply goes, this capacitor says, hey, look, the main power supply gone, now you start functioning. So this capacitor sends a signal to the engine saying that you start functioning. So when the engine starts functioning, this engine, it sends the power back to the main power, wherever you need the power. So here, I have something called engine. Now, this engine, when you switch on, it's like this Yamaha bike. If someone kicks on the Yamaha bike, it makes a loud noise. So whenever you switch on the engine, it makes a lot of noise. This noise is compressed. It is condensed using a acoustic. Acoustic is like a cap. It's like a box. Engine is there. This box is fitted on the engine. So that's called acoustic. Now, this engine needs something called alternator. What is an alternator? Alternator is like a connector. The moment power goes out, I have to give a signal. Like I said, capacitor, conductor, internal circuit. This internal circuit is called alternator. Now look at the way the business operates. I have DG set which has a rate of tax 5% to 28%. I have a DG set whose rate of tax is 5% to 28%. Now, what is a DG set? Engine to which an alternator is fixed. On both of these, acoustic is put. All these three assembled together is called as a DG set. This is available in the market. Now, I can buy based on the capacity, based on 5 kVA, more than 100 kVA, the rate of tax alters. Now, the rate of tax of acoustic is 18%. The rate of engine is 18%. Rate of alternator is 12% to 18% on the basis of the cable and assembly wires. Now, assuming 36 lakhs happens to be a cost of a DG set. Now, individually, if I have to buy, say, engine, alternator, and acoustic, and labor. Say, engine cost me 50% of the basic cost. Alternator cost me, say, 25% of the cost. Sorry, this is acoustic. Alternator cannot be so much cost. This alternator will be around, say, 5%. Rest all, let me say, is my labor charges. This is how I do my costing. Now, as I say, this is 28%. So engine is 18%. Alternator is 18%. Acoustic is also at 18%. Labor, let's say 18%. Now, ideally, Look at the tax. This 10,08,000 is the tax if I buy a DG set. Instead of me buying a DG set, I buy all this independently. This is my tax component. Isn't this a tax planning? If someone asks you, sir, is this a tax evasion? I would say, definitely not a tax evasion. This is a tax planning where look at your business model, look at your scale of operations, look at the market, how it operates, see the cash flow position, and based on your requirement, structure your business such a fashion where your funds have been meticulously planned. So here, what if I have a supply for these things separately? Now here, instead of ordering for DG set, I get into a contract with Kirloskar. If Kirloskar happens to be the supplier, I'll tell to Kirloskar, please supply me engine this separately. Now Kirloskar says, supply value is 36 lakhs altogether. Pay me an advance 20%. Now this 20% happens to be 7,20,000. Now you as an accountant, when you receive this 7,20,000, what is important here is how you identify 7,20,000 for goods, how you identify for service. Out of this 7,20,000, based on the proportionate value, you have to identify labor, pay GST on advances. Reason? Section 12 for goods, Section 13 for services. No GST on advances. Pay GST on advances. So here, you as a finance controller, you as an advisor, you have to understand the contract, how much money was received from the customer, how do I allocate this towards the labor, and how much GST as per Section 13 has to be paid. Students, this example can be tested as a question in your examination for 6 marks, where the contract value of 36 was identified this way. Based on this, when an advance was received, they'll ask you to determine what is your time of supply. So here in this case, first thing we will say the value of supply for service. You will say that 7,20,000 happens to be the labor portion out of total contract value of 36 lakhs. That gives me a 20%. So you will say that out of your advance 7,22,000, you have received 20%, that is 1,44,000 as money towards service. On 1,44,000, say 18%, which is inclusive basis, into 18 divided by 118. GST on service, that is advance. Section 13, subsection 2. This happens to be your GST, which needs to be paid on advances received. Expect these sort of conceptual questions from these topics. Now, if you're looking from examination point of view, it could be a very simple topic for understanding, but these sort of practical questions where you need to understand what is the supply, how do you identify the supply towards goods, towards services, identifying the value of service, from there identifying the value of GST. Now here I've received only 1,44,000. It didn't say I have received GST extra. If it is including GST, look at the formula. I've said into 18 divided by 118. So you have to calculate the value of service You also have to calculate the value of GST, and you have to conclude your answer with the time of supply provisions. For doing all this, you can expect 4 marks from your examination. Let me know you have any doubts. Sorry, I think my screen sharing was stopped. These are the values which you have to work out. On 7,20,000, what is 20%? How do you calculate this 1,44,000? On this 1,44,000, how do you calculate this GST on inclusive basis? For doing all this, you will get 4 marks. So let me know if you have any doubts before we go ahead. Yes, Ruti. Sorry, I forgot to unfreeze. This is a calculation which I was trying to explain. Let me know you have any doubts on this calculation. What I have done, I have on 36 lakhs, I have received advance of 20%. So on 36 lakhs, 20% happens to be 7,20,000. This 7,20,000 is for supply and installation. When I know this individual breakup, I have to identify value of supply of service. How do I get the value of supply of service? What I have done is 7,20,000 is the total value of labor. That divided by the total contract value, 36 lakhs. It gives me a percentage called 20%. On 7,20,000, I apply 20% to get 1,44,000. This 1,44,000 is the value of supply of service. On this, when I have to calculate GST, I say this into 18 divided by 118. I'm going to get my value of GST. Hope this is clear. Let me come back to my presentation. So the next in row for discussion is advances. Kaushik is asking, what is the common error 1? Common error 1, Kaushik. Tax invoice was not prepared. Like you remember, I gave scenario 1, scenario 2. Let me come to Excel file. Kaushik is asking this example 1. Yeah. You remember this, sorry, scenario number 2. This transaction, I have to raise the invoice on 28th January, but I forgot to raise the invoice on 20th January. I have made a supply. Invoice was not raised. Or like, there will be some sort of confusion. Goods have been dispatched. Invoice was already billed. Invoice has to be billed from different branch. So that could be an issue with respect to supply which took place where invoice was not raised itself. Goods not, sorry, this is little different. I'll come back to this example. In this scenario 1, invoice was prepaid. Delivery not made. February 2022 happens to be the month end. Goods were dispatched on 1st March 2022. Or I'll make a cutoff date this way. 28th March 2022, I prepared the invoice. 3rd April 2022, goods were dispatched. Now here, we call this as a timing difference. Invoice has been prepared as per my books of accounts, but the actual dispatch only happened on 3rd April. Now for your accounting purpose, you will call as goods in transit. You will not permit your accounting entry to raise this as a revenue. So when I prepare my financials, I will not show this as an income. But since the invoice was prepared for the purpose of GST, I will go ahead and file the GST return. I'll also make the payment of GST. There's a blocking of working capital. Now, this happens in large organizations where there's no integration between accounts department with stores department with your other various ancillary departments. So this is again a timing difference between your financials to your GST returns. Then point number 3, receipt of money in advance from a customer. Receipt of money in advance from a customer who places order for supply and installation. Now this advance is a point where contract should have a clarity that whether this money was for goods or this money is for services. As per the contract, I will supply goods, I'll also supply services. Customer paid me, say, 50,000 in advance. Customer didn't mention, was this for goods, was this for services? Classification issue, identification issue. Now, section 12 says, on advances, don't worry, don't pay, time of supply is not triggered. For services, time of supply is triggered. So that is one particular issue we have with respect to contract where there is no clarity for goods and services. Now we are coming to practical issues. This is one perennial issue for larger organizations where you have to handle as a finance controller. There is a money received at the head office. Like you look at, let's take example of India Cements. India Cements has their operations across India. India Cements have their head office at Chennai, Tamil Nadu. Assuming there is a dispatch happened in Dehradun, there is a dispatch happened in Goa, there is a dispatch happened in Karnataka, there was a dispatch in Tamil Nadu. Now across India, customers makes the payment well in advance. Customers also makes the payment against supply. Now when I take example of India Cements, this India Cements, they supply cement. They also supply something called RMC, ready mix concrete. Now, when you read this questions, I would recommend don't read only for the sake of examination. Look at the concepts, how practically this is going to be helpful to evaluate business once you get into the practice, once you get into the industry. Advisory, reading in between the lines. All your questions which are framed your examination are all from the 3 years practice where you come across with these circumstances. So coming back to this example of India Cements, when you talk about RMC, this RMC is nothing but the big truck comes with a ready mix concrete, which is used for slab pouring. So when RMC is taken out of this machine, there is something called piping activity. Sale of RMC, they say per cubic meter, 3,000 is the cost. For pumping, 30,000 is the cost. So there is a money received from a customer, which is for sale of goods, which is also for services. Now, assuming in Chennai, I receive the money. Until marketing people track each and every payment against each invoice, how do you know how much money I have supplied from each state? Definitely, India Cements would have the registration across all the states and union territories in India. I'm talking one of the example. If you happen to work with India Cements or Reliance or all these big organizations where common account is there, money comes in, where there's no clarity with respect to which customer, routing and payment is very, very cumbersome. Point number 2. When I receive a bulk payment, money against tax invoice, money against the supply. Now, it becomes at times complicated. How much is the value of supply? How much money customer has paid? Sir, I have given a purchase order for 50,000, but customer made the payment for 1 lakh. Why is that customer made payment of 1 lakh? Is it, sir, I have one payment to receive. I will transfer in advance. You appropriate 50,000 for this tax invoice. I have to keep a track of advances. When you are into service industry, hotel accommodation, if you have to work with Taj or any other group of hotels, service industry, this is a perennial issue with respect to tracking advances. Section 13 says time of supply is triggered for services. How you account for services when an invoice is raised? How do you lock off that advance with this invoice? And how do you track how much money is yet to be received, how much advance is yet to be adjusted. Take another example of tour industry, tour and travel. I'll give an example. Tour and travel industry, assuming, say, Dhruti happens to be a tour operator. Wipro gives a contract to Dhruti saying that wherever my employees travel in India, domestic travel, please do this flight booking. Also, whenever employee travels, I need to have hotel accommodation to be booked. Also, whenever there is a cultural event, please do this event management. Now, Dhruti receives every month some 2.5 crore to 3 crores from Wipro. Now, Dhruti has to keep a track what is for domestic travel, where my rate of GST is 5% for domestic, 12% for international. What is the amount received for hotel accommodation, where the rate of tax is different based on the tariff? What is received for event management, where again the rate of taxes are different? These are all various issues where single customer, multiple services are involved. Receipt of amount for mixed supply. I've given example of this RMC and this DG set. Again, this classification of goods, 28%, 18%. Now, this is one issue. When I receive a contract, I don't know whether I have to classify this contract as a supply of goods or as a supply of services. If I classify the goods, if I classify this goods, this contract as a goods, I'll give an example where this practical issue comes into picture. Say there is a office where interior decoration has to be done. In an interior decoration contract, I give a list of requirements. I'll say, I need Asian paints. I need Samsung air conditioner. I need this particular branded plywood. I need this particular branded furniture. I have given all branded furniture. Then I need your services to liaison and do the installation work. Now here, is it sale of goods? Is it a service? Contract number 1. Contract number 2. I will give 30 lakhs to the interior decorator. I'll say, Sukriti, you take this 30 lakhs. Whatever AC and all is required, I don't know technicalities. You pick and choose and do the service for me. Now here comes, in one case, it could be supply of goods. In another case, it could be supply of services. Not every patient has same treatment of, same medication of treatment. Case to case, client to client, my business change and I have to change my mechanism of treatment, right? So these are a couple of issues which are connected with respect to my time of supply. Now, let me come to my MCQs for today. Let's discuss few of MCQs and then we'll start with our, we are at 8:58. Okay, then we will have this MCQs addressed and then we'll go to the valuation. Before this, let me just quickly see if there are any questions and then I'll come back to the MCQ. Students, if I have not addressed any of your questions, these questions are getting vanished but the moment session gets over. The next class, whenever we have sessions, please put back your questions, like Kaushiki has raised the questions today. Not only this topic, any of other topics which you have read, where you have a general doubts, feel free to raise those questions. I'll ensure that you get the answers addressed on those topics. As of now, no questions. Let me come back to my MCQ. First question, time of supply shall be relevant for determining. So when we have read this topic called time of supply, which is there under section 12, which deals with goods, which is there under section 13, which deals with services. So it is used for what? Date of registration. So it says, when I read the topic time of supply, when I read this provision, it gives me date of registration. Clause B. It says it is a point in time when a liability to pay the tax occurs. It is a due date for filing returns under GST. So what would be your answer? A, B, C. As I read through, please mark your answers. I'll keep on validating your answers. Kaushiki says C. We will stretch for another 2-3 minutes, Kaushiki. We have these MCQs. We will finish off those things quickly. So for the first MCQ, it will be not for relevant filing of return. It is the point in time when my liability gets crystallized. I repeat, my time of supply is relevant for crystallizing my time when liability occurs. Filing of returns is a procedural aspect. Date of registration is an independent activity. So answer for first question, point number B. Point number 2, question number 2. Continuous supply of goods shall include, when I talk about continuous supply of goods, it includes goods provided on a continuous basis, goods provided on a recurrent basis, invoices issued on periodical basis, all of the above. Now, when we have read the definition, I have a contract where goods are provided on a continuous basis or on a recurrent basis, and my invoice is issued on a periodical basis. All A, B, C, 3 are correct. So answer for this will be D. Question number 3. Tax invoice shall be issued when, point number A, after receipt of money from the further supply. It says when I receive the money, then I will issue a tax invoice. Point number 2, on receipt of advance from the recipient. Point number C, on or before removal of goods. Now, when I receive money, this is a post factor. It is a post facto. That means receipt of money is secondary to supply of goods. So it is incorrect. Receipt of advance. My receipt of advance may not be always correct. Advance, when I receive advance, I issue a voucher called advance voucher. On or before removal of goods. So when I talk about goods, I raise the tax invoice as per section 31 on or before removal of goods. That is your answer. Moving on. Point number 4. My time of supply for RCM. My time of supply RCM shall be derived on the basis of invoice issued by the supplier, payment made to the supplier, receipt of goods or services from the supplier, all of the above. So when I read section 12, subsection 3, goods tangible, so date of receipt is required. Payment made to the supplier is also important. The day, 31st day from the date of invoice is also relevant. So all 3 points are relevant. Accordingly, answer is D. Then, question number 5. Time of supply for voucher shall be. So we have discussed for voucher for goods, voucher for services. My time of supply voucher shall be. Point number A, value mentioned in the voucher. When a value is mentioned, it is just a value. It has got nothing to do with my time of supply. Only on the date of issue of voucher. So when I have issued a voucher, if it says this is the day you have to redeem, then that can be called only on date of issue. Date of issuing of voucher has got nothing to do. That voucher should specify redemption, this is the date, or this is the period within which you have to redeem. So the date of issue of voucher is just indicating from what date the 3 months will be calculated. So point B also is irrelevant. Date of redemption. So out of 2 points, my time of supply will be the day when I know the date of redemption. Like one example I give, when I have gone to this Taj group of hotels, they say 20% of the value of spent, they say this is voucher. And this voucher, this is a date that is your next birthday, you have to redeem. When I know the clarity on that, that shall be my time of supply. Last question. My triggering point for identifying time of supply in case of continuous supply of services shall be. So in case of a continuous supply of service, completion of event or an activity. So as per the contract, whenever an event is completed, is there a triggering point for time of supply? Answer, yes. When I'm rendering services on a continuous basis, the point or the milestone whenever the event is completed, when I have to receive money or when I have to raise an invoice. Date of receipt of payment. So if there is a milestones, each and every date of receipt, that shall be my time of supply. Point in time of supply where money is due. My contract indicates that quarter, like July, August, September, that every month I have to receive money. So the point in time when the contract indicates, that will be triggering point for time of supply. So here A, B, C, all three satisfy the definition of my continuous supply service read with section 35. Sorry, section 31. Answer for this will be all of the above. So students, this is the answer for my last MCQ. So with this, we come to the end of our today's discussion. Next class, we are going to deal with valuation. It is a wonderful topic. Expect one compulsory question from valuation. So till then, we just recap this topic. This time of supply is a very small topic. Read through your MCQs in your institute material. End of the chapter, there are few problems for testing your knowledge. Right? Don't dry your concepts. Please come prepared. Till then, good night. Goodbye. See you.